So you've got a really low interest rate, but you've got a conventional loan with private mortgage insurance, and you're trying to figure out how to get rid of it. You need to check this out. Hey, it's Craig back with another Mortgage Minute. And listen, there's a lot of people right now that have conventional loans with really low interest rates, and that's really cool, right? Everybody likes a low interest rate. But if you've got a conventional loan that you're currently paying mortgage insurance on, and you want to know how you can get rid of the mortgage insurance, you need to listen up. Okay. Now, of course, you can always refinance that mortgage and do a new loan at, if you do a conventional loan that's less than an 80% loan to value, you're not going to have mortgage insurance. But if you've got a really low interest rate on the conventional loan, that probably doesn't make the most sense right now. So there's other things you can do to get rid of the mortgage insurance. So there are two ways that for sure your mortgage insurance will drop off. So the first way is based on your original amortization schedule. Whatever date your loan is originally scheduled to be at 78% of the original value, the mortgage insurance will automatically drop off. Now, let me say that in English, okay? So let's say that the sales price of your house was 500,000, okay? And let's say that the home appraised for 500,000 when you bought the house, because you got to understand the original value is always going to be the lesser of the appraised value at that time or the sales price, whichever's less, okay? So let's just assume sales price and appraised value is 500,000. The original amortization schedule will define the date that your loan amount would get to 78% of 500,000. So I'm using my calculator. That's 390,000. Okay. So let's say that based on your closing, the original amortization schedule said that in October of 2025, your loan to value would reach 78%. In that instance, you could literally go into a coma, still make your mortgage payments. Let's say it's drafted from an account that's got plenty of money. In October of 2025, you don't have to do anything at all. The mortgage insurance will automatically drop off. You wake up out of your coma, and that's good, right? We don't want to be in a coma. You wake up out of your coma, you no longer have mortgage insurance. So that's one way, okay, based on the original amortization schedule. The other way that you can get your mortgage insurance dropped off for sure is if you pay your loan balance down to 80% or less of the original value. Okay. So again, let's use the 500,000 sales price. 80% of that's $400,000. So if you pay your loan amount down to 400,000 or less, once you do that, you can then request that the mortgage insurance be dropped off. And as long as you've got a good payment history, and the lender may require your servicer, it's a better way of saying that, whoever you're making payments to, they may require you to get an appraisal done to verify that the current value of the property is still equal to at least the original value. So again, let's say that bought the home for 500,000, original value is 500,000. You pay your loan amount down to 390, for example. You can request the mortgage insurance get dropped off as long as you've got a good payment history, and if you get an appraisal done and the property's worth at least 500,000, your mortgage insurance will be removed in that situation. Okay, so those two, you can count on it. You can get that done. Here's the third way, and this is totally up to the servicer. Okay, if you feel that the value of your property has increased since you purchased your home, and you feel that your current loan amount is at least less than 80% of the current value of the property, you can always call your mortgage servicer and request that they remove the mortgage insurance. Here's the deal though, they don't have to do that, right? They're not required to do that. But I can guarantee you they're not going to pick up the phone and call you. So it's worth a phone call. If you feel like you're at 80% or less based on the current value, contact your servicer and say, hey, is there any chance we can get the mortgage insurance taken off the loan? They're either going to say, yeah, we'll take a look at it. They may, I'm pretty sure they would require you to do an appraisal at that point. And they may say no, but all they can say is no. Like I said, they're not going to pick up the phone and call you. So if you've got questions about that, give me a call, 615-498-5626, and I appreciate you watching.